Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 21st, 2024. What can I say? Markets are sitting right on the ledge here because we have a rise in volatility, which we're going to discuss that. And you can see all the events that are happening this next week. There's so many of them. So there's a lot of things that can actually move the market. But I do want to talk a little bit about volatility. You know, volatility is on the rise, and there is no better way to take advantage of volatility that's on the rise than look at the trader funding program, because this is what we as traders love to do. We love to trade markets when volatility is on the incline, especially when it's trading above 20 and the VIX. That's when the situation is ripest for us as traders to take advantage of both the ups and the downs of the market. So again, the way you can take advantage of it is the trader funding program. Remember, for the month of July, if you take a new assessment, that means you want to access larger amounts of capital. You don't want to put your own money at risk. Well, if you want to do that and you want to take an assessment to see if you can qualify to access larger amounts of capital, do it in the month of July. You'll get a one-on-one consultation with me. I did 2 consultations on Friday, and I believe those traders walked away from, some nuggets that will allow them and enable them the ability to pass an assessment easier. And that's what we want to accomplish with the trader funding program, is get you involved, accessing larger amounts of capital and passing assessments and being inside of our community to do it. And that's what happens with the trader funding program. So check it out. Now, like I mentioned, volatility is on the rise and equity markets are really starting to be at risk here. So let's discuss a little bit about what's happening in the S&P. I'm going to actually go into other markets as well. Let me pull up the S&P here. It is, right, did I just pass it? Oh, there it is. Here's the S&P right here. You can see we were pushing right up against that 161% extension channel resistance as we were talking last week. And we thought, there's a risk of a blow off top if we can just break out to the upside. But like I said, the political risks are rising, and it's really starting to affect the markets. And now we're trading at support. But look at how important this 50 DMA is on the S&P. Now you'll see it right here, how we were supported right there. You can see how it acted as resistance here, and a break below the 50 DMA most recently back in April allowed for several days of downside. So an approach down to the 50 DMA, or you'll also see near channel support, is going to be very critical later on this week. And we're going to discuss that, obviously, and other indexes as we go through what's happening this next week. So let's discuss what is happening this next week. So on Sunday evening, we have China 1 and 5 year loans. And let me get rid of myself here. We have China 1 and 5 year loans. We're not expecting any change on those rates. But on Monday, we have Mexican retail sales. Now, the dollar Mexican peso is very much in focus right now. And the reason why I think the dollar Mex is so much in focus at this point in time is because there is a risk to this carry trade. And matter of fact, let me pull up the Mexican peso Japanese yen. And I did a tweet about the Mexican peso Japanese yen and how important this trend has been literally all through President Biden's presidential cycle, through this term. If you look in the beginning of 2021, basically the dollar Mexican peso unabated has been moving higher. It's a huge benefit to carry traders to sell Mexican pesos, buy Mexican pesos and sell Japanese yen, because they capture this huge carry interest. But now you have the risks are obviously tilted now towards a Trump second term, especially after last weekend's assassination attempt that was thwarted. His probabilities of him becoming the next president have gone up tremendously. So when you take somebody like President Trump, who really might put a more hard line not only against Mexico, but the new Mexican government coming in with President Sheinbaum when she takes over, he's going to try to push her a little bit, in my opinion. And then on top of that, President Trump, if he comes into office, he's really talking about, you know, Japan's the yen weakness that has really benefited Japan as an economy over the course of the last 4 years. So you get a reversal of those two, and the Mexican peso, Japanese yen could really come under pressure. But anyway, going back to what's happening on Friday, or excuse me, on Friday. On Monday, we do have retail sales. By the way, that's not the only economic data that's coming out this week in Mexico, because we do have inflation data on Wednesday morning. But the one thing I want to show you about the US dollar MEX is we were looking for a move possibly down to 1740. Obviously, we found some support at the 50 DMA. If you are a Forex Analytics subscriber, you probably saw the pattern in play, which was put in a few days ago. That means that we were looking for a higher price in the US dollar Mexican peso from when it was trading at 1760 to 1770 earlier last week. And you can see we are on the rise. Now I want to show you something. Let me delete a few things here, because remember, these drawings are from our week ahead videos. And so I got to remove some of these things just to make it a little bit easier to consume for us. And I'm going to do one thing right here. Okay, you can see here is channel resistance. And this is basically channel support. So what you'll see in the dollar MEX is we are now starting, whoops, let me delete that. We are now starting to approach channel resistance. And so a breakout of the US dollar Mexican peso looks entirely possible, especially if equity markets continue to start to show some weakness. So keep the dollar MEX on your radar. Mexican retail sales on Monday. Wednesday, we have CPI. Tuesday, we have existing home sales in the U.S. We have Richmond Fed. We have a lot of earnings. So I'm going to go over some of the stocks actually that are releasing their earnings on Tuesday. But I want to go to the dollar index really fast. If you remember last week, we were looking for a move down towards, and I'll draw it back out for you, because remember, the dollar index is something that I use through all of our shows, not just the week ahead video with you guys, but I showed you that Gartley pattern last week. Fortunately, we didn't reach all the way for those lows. I was hoping the euro would reach for 110 and the dollar index would have gotten to 103.20. Instead, what we did is we've created a false breakdown. You got a bunch of traders John Ging their way in short in the dollar, and then they got that hard reversal over the course of the next 2 days. Now, as a result, the dollar index does look capable of a further rally. Now, remember, we are in a big triangle. You can see this big triangle pattern, whether it's the black trend line here or this dotted red trend line here. We are in a triangle, which is a consolidation. So it's very common to get whipping back and forth inside of a triangle, inside the apex before we actually break out. So are we ready for a breakout yet? No, we're actually in the middle of the triangle. So just keep that in mind when you're dealing with the dollar and trading dollar pairs. A couple other things that I wanted to mention outside of the dollar index is I wanted to show you a couple of these stocks that are reporting earnings. Like we have Google reporting on Tuesday morning. Now take a look at Google and take a look at the long term. We actually rejected the 161% extension basically in Google. That's a big deal, in my opinion. That means that we are very well respecting the golden fib 161% extension, which puts the risk to the downside. You know, Tesla has been consolidating, but they also report on Tuesday. And you can see Tesla, you know, we're actually making lower highs. And I would probably argue that we might actually be developing some sort of triangle type of pattern, triangle type of consolidation as well. Matter of fact, that might end up being a false breakout as far as I'm concerned, if you look at it in this fashion. So keep your eye on Tesla, because we might have actually just had, I haven't drawn on this chart in quite some time on our shows, but you can see that false breakout on a weekly basis. That's not necessarily a good thing. We have other companies like Visa, Louis Vuitton, Texas Instruments, Coca-Cola, GE, UPS. Some of these, stocks are very important for certain reasons. Like Texas Instruments, obviously it's a chip maker, and the big reversal from these highs should be a little bit of a warning to the upside here. We pay attention to Louis Vuitton because we want to pay attention to how the high-end retailer is faring right now. My assumption is, between, I think Hermes reports later on throughout the week. But you take some of these high-end retailers that have all these high-end brands, my assumption is they're not being affected too much because they are more sensitive to what happens in equity markets and in the real estate market. And when real estate prices continue to stay relatively high, as real estate investors, you're not really too worried. And equity markets, obviously, we're not very far off of all-time highs in the S&P, so you're not really worried about that either. So you're probably spending pretty good, or you're spending quite a bit as a higher end, top 10% consumer. But you start looking at digging deeper into Louis Vuitton and Hermes and what's happening there. Maybe it tells us a different story. That's why the earnings for those are going to be pretty important. We also have UPS. Have you seen UPS? I mean, UPS is like the copper of the equity markets. When you start thinking about Dr. Copper and growth and industrial usage of copper, you look at UPS and you're like, yeah, UPS is a very, very well-run company. When it's showing weakness like this, unless it's executive management reasons, probably the reason why UPS is starting to weaken is because people are expecting the global economy to slow down and trade start to slow down a little bit. So UPS, keep an eye on it and be listening to the earnings that they have actually on Tuesday as well. Now, also on Tuesday, we have a 2-year note auction. Obviously, the yield yield curve inversion and uninversion is being very, very watched very closely right now. So this week we have 2s, 5s, and 7s that are being auctioned off later on this week. And speaking of which, let's talk a little bit about the ZNs. I still think that the 10-year is at risk of breaking higher. Now, we haven't done a whole lot since we've broken out of this triangle. We're more or less just consolidating around the 618 retracement, but that doesn't mean that's gonna persist. I still think that the risk is that we see higher bond prices and lower yields. Like I said, we have a 2-year, 7-year, and 5-year note auction this week, and if those auctions go off well and yields start coming down, watch this 10. It's gonna matter. Now on Wednesday we have South Africa inflation. Now I haven't spent a lot of time. Well, let me backtrack a little bit. If you're in the Forex analytics community, earlier this last week I was looking for a dip below 18 to buy the dollar South African rand, because we gapped down there last week. We rallied past it, and I was looking for a dip all the way back down to 18 to get involved, because this is my opinion triangle support. We didn't get to sub 18. I think we got to 1805 the day I had bids out there. Those next 2 days I had some bids just below the market, never got triggered. So you can see the US dollar South African rand is making a little bit of headway. A break above the 50 DMA, it's going to be pretty bullish. Now remember, it's South Africa inflation on Wednesday morning. That inflation data comes in a little weak. Then we might see a bit of a move higher there. Speaking of which, we also have Mexican inflation on Wednesday as well. I know I mentioned it earlier, and you guys will be paying attention with the dollar Mexican peso, not only from the economic data standpoint, but also some risk aversion standpoint, going back to the Mexican peso, Japanese yen. Wednesday is going to be an important day because not only do we have the Eurozone PMIs, but we also have the UK PMIs and the US PMIs. So, we'll go back to that theme, thinking about US exceptionalism. Is the US still quote unquote exceptional or not compared to, the Eurozone and the UK? We'll be getting PMIs, and you can see the problem with the euro is we did not reach all the way for that 110 level, which I was hoping for last week. But instead, what we've done is we've made a little bit of a false breakout. So that false breakout should lead us lower, probably to retest the 200 DMA with the euro. Now, another, UK PMIs, well, Sterling has been on an absolute rampage, but I want to show you a couple of things. Let's delete some of the stuff that we've drawn out here over the last couple of weeks. Obviously, I haven't looked at this with you in the last few weeks, but notice the rejection here at 161% extension. That's the golden fib, big reversal, and now you got to think about these types of situations when, like, I don't even have any sterling exposure right now. I'm not long cable. I don't have any longs, but what I'm thinking at this point in time with somebody that doesn't have any exposure is, how are the bulls going to feel if we start cracking some of these key levels of support? If you think about that and you're like, well, if everybody was bullish sterling or cable rather over the course of the last couple of weeks, they're probably going to get a little nervous if we break back below 129, and especially if we break back below 128.60. So those are levels of interest that I think that I care about, because if you start thinking about false breakouts and you think about longs that start panicking, and if they sell, well, who wants to be selling with them? Me. I'll be looking for shorts. So keep an eye on the pound dollar on any dip to 129 or 128.60. If we get down there, it's going to be very critical for the bulls to hold it. One of the big events on Wednesday is going to be the Bank of Canada rate decision. And everybody is asking right now, are we going to get a cut or not? And the market at this point in time is expecting the Bank of Canada to cut rates to 4.5%. And everybody's going to also be watching and listening to how dovish the Bank of Canada is. Are they dovish? Are they not? Is this are they going to just cut and hold? Is this gonna cut rates and that's it? Or are we going in a further rate cut campaign? A lot of this is going to be moving the US dollar Canadian. But I want to show you where we're at right now technically and why this is so important. I currently have some Canadian exposure, and I turned around and went long dollar CAD when it was down here at 136 a couple of weeks ago. A lot of you all know that because we didn't break down. I just turned around and went long. But I'm still worried about positioning in the Canadian dollar because it is aggressively short. The speculative market is very short Canadian dollars, meaning they're looking for the US dollar Canadian to eventually break out to the upside. That's what the speculative positioning is in the market. I can see that. I mean, I have all the arguments to suggest that is indeed going to eventually happen. Does it happen now? I think we'll have to take cues from the Bank of Canada on Wednesday. A couple other key earnings that are happening on Wednesday. We have Qualcomm and IBM. Take a look at Qualcomm because it's a very, very important chip company, and you can see how we are actually starting to show some signs of weakness. And I think anybody that owns IBM is probably going to be more focused on this level than anything, because if you break below that, then that means it opens up the gap fill, which will take us down towards the 200 DMA. So some pretty important levels on Qualcomm coming in. Also, IBM is also reporting, and IBM has already filled that gap. But notice how we're making long-term lower highs. We're in between fib levels right now. We're in between the 618 and 78% retracement, or at least that's where we stopped. But IBM looks a little vulnerable. We also have KLAC, CLAC, KLAC 10 core. Their earnings will be on Wednesday as well. Thursday, we have Norway's employment data. Now, the one thing about the US dollar Norwegian krone is you can see we are pushing up. Whoops, let me go ahead and move that. We are pushing through resistance here at the 50% retracement. Obviously, being in a triangle, we could push to the upper end of the triangle, especially, actually, I didn't want to delete that, but that's okay. I'll just redraw it. Especially if we have weak Norway inflation, there's a risk, I believe, to push back up towards this major. Let's zoom out and in. There you go. We'll have an opportunity to challenge this major trend line once again near the 1110 level. Also, on Thursday morning, we have South African producer prices. We have German IFO. We have U.S. advanced GDP, unemployment claims. Now, if you guys haven't taken a look at the weekly unemployment claims, let me just take you over to Forex Analytics really quick, and let me just show you something. Let's go to Thursday. Here's Thursday's data, and here is the unemployment claims right here. This is the initial jobless claims. If you look historically, and we're going to have to go all the way to the way back here. We're going to have to go into last year. Yes, that was a reference to Stranger Things in the way back, right? Oops, I don't want to do that. But what you have to go back to is summer of last year. We were ticking higher towards the 248,000, and you can see it backed off. And then we've been really under 250,000 pretty consistently throughout this year. This last week, we had come in at 243,000. That's getting very close to that 250,000 mark. And if unemployment claims start to breach that, you guys know how to read charts. Breaks through 250, looks like we might go to 300, right? That's what the chart would look like. Well, keep an eye on weekly unemployment claims this week, because they are starting to trend a little bit higher now. All right, so continuing on, that was on Thursday. Thursday night, we have the Tokyo CPI. Now, I want to take a look at the US dollar Japanese yen, because we saw a massive move in the dollar yen this last week. We obviously broke down. We discussed that. For those of you that don't know, I'm very, very actively trading the US dollar Japanese yen now. I will talk about it on our review, the best trade setup review, and I have a feeling it might come back on the list this week. Maybe. All right. So anyway, US dollar Japanese yen is broken down. We hit the 88% retracement, which means that there is now a risk that we can really move towards this 152 level. And the thing about the dollar yen, and I wanted to mention this because, when you have former President Trump, he's talking about the how Japan has really taken advantage of the last 4 years. And, arguably, you look at the last 4 years of what the US dollar Japanese yen has done, this is what has happened. We've gone from, let's just talk about, 2021, basically we were trading at 100 yen, and we're at actually 157 yen. Look at how much of a decline the yen has taken. I mean, the yen has taken a 50% haircut in valuation over the course of the last 4 years. If President Trump comes back into office and he really talks about his disdain for, this weakness in yen, and he really starts to harp on it, we could really see an unwind of this massive carry trade that has been going on for the last several years. So that's a really, really important thing to be looking at. All right, so we have Tokyo CPI on Thursday. Friday, we have Norway retail sales. And then on Friday, we have US PCE, which should be between that, the PCE, we have the GDP, advanced GDP on Thursday. We have the PCE data. We have some housing data. A lot of things that could really move the needle in the US dollar this week. We also have University of Michigan consumer sentiment, and then we have 3M reporting. By the way, you look at 3M, this is not 2M, 3M. You look at 3M, this is not a very bullish stock, but it is a defensive stock. I would say that if you do see equity markets and you start to see tech stocks really roll over, it's stocks like 3M that could really outperform the market. How much higher can we go? I don't know, but at least I don't think it'll be going down, if at all, if there's rotation out of some of these tech stocks and into some of the defensive names like 3M. All right, really fast. Last week, let me see if I can pull it up really quick. Last week, I talked about the Gelber Group and the breakout. Make sure you check this out. This is free. We will have a couple of the traders from the Gelber Group will be joining us on August 1st on the F.A.C.E show. It is going to be a free trading competition where there's significant cash prizes. It's only to U.S. traders, and they are only accepting a certain amount of applicants. They are really testing you to become a trader, to join their ranks either in person or remotely in their New York, Chicago, or their other office that's in Europe. But there's $35,000 US in cash prizes. So check out the Gelber Group. It's free to apply. Remember, you do have to be a U.S. citizen. And for those of you that are not U.S. citizens, make sure you're here listening on August 1st to the F.A.C.E show at 8:30 a.m. Eastern, and listening to the interviews with these gentlemen, because this is a very similar group to the group that I traded for over 4 years. And so, if you think you're a really good trader and you want to have this opportunity, you should take advantage of it. Most of the times these opportunities aren't going to be available to you unless you know somebody in the industry. They're really looking for new traders to join their ranks. And if you want to learn more about the Gelber Group, just go to the Gelber Group and you can see their office, their trading floor used to look like a lot like our trading floor that we had in Florida. It looks very, very similar. So check them out. Remember, August 1st, 8:30 a.m. Check it out. All right, continuing on. So I do want to talk a little bit about some of the other markets. Let's talk about gold. Gold, I want to share with you guys a couple of big developments. First of all, the move that you see here was the 127% extension. That is what stopped the market. Actually, it's the 127% extension of this move. This is the previous high to that low. 127% extension stopped us on a dime. Look at longer term weekly chart. That is a big, big channel on the weekly chart. We talked about that last week. If you utilize Forex analytics and you follow Grega's work on his Elliott wave analysis, let me see if I can pull up XAU. Where is my gold? There's XAG. That's silver. Oh, here it is. If you look at some of his Elliott wave counts, he was looking for a daily, possible, wave 5 reversal. And it's not him, the only Elliottician that was looking for a move like that to wave 5. We're looking for, that divergent relative strength also really weighed on the market as well. You can see the breakout here, and relative strength is very divergent. So it looks like there might be a pretty serious correction happening in gold in the weeks ahead. That doesn't mean that gold's going to completely reverse, but I think it's going to give you better opportunities to be on the long side at better prices in the weeks ahead. So keep an eye on gold. Also, I needed to show you guys copper. This is scary, right? Copper is showing some serious weakness. We closed at the 618 retracement of the last entire leg higher, but it still looks like there's further downside ahead in gold or in copper. It looks like we could test the 200 or the 50 DMA right here. I don't know what happened to my 200 DMA. Oh, you need to do it like that. Okay, here's the 200 DMA right here, because we've already broken the 50 DMA, and it could test the 405, 404 level. That seems very realistic in copper. Also, we can talk a little bit about crude oil. The thing about crude oil is we are stuck between basically, oh wow, that breakdown did happen on Friday. I didn't even notice that. Sorry, a lot of my quotes were down actually on Friday too. So we broke down in crude. Yeah, that looks like we're going to have a little bit further downside in crude. I wasn't even paying attention to that on Friday because I was in meetings and I didn't know that those quotes were down. So take a look at crude. Crude looks like we could open up some downside towards 77 bucks. I didn't think we had broken 80. I didn't take a good look actually on Friday. So there's crude oil. And then we looked at the 10-year. And now let's take a look at just some of the other key indices. So we talked about the S&P, and I think we should also, so talking about the S&P, how important the support levels are. Channel support, we've already broken one minor channel. We have another channel support coming up, and really a break back below 5,500 I think is going to open up some downside here, right through here, right? Then we have to pay attention what's happening in the 50 DMA. But if you look at the NASDAQ 100, the NASDAQ 100 is also challenging channel support. I'm going to just redraw that just a little bit. Okay, looks something like this. We're also challenging channel support. You can see the 50 DMA right here. If you look at the Russell 2000, big rejection of the 161% extension, and also the 78% retracement of this entire move over the course of the last few years or a couple of years. So big rejection there. And then if you take a look at the Dow, this is a, here, let's go over to the daily chart here. The risks I see with this Dow is if you look at the weekly candle, that is a gravestone doji. I know it's still you might call it a bullish or a white candle or a green candle. It still is colored green or white, but it's still a gravestone doji. Gravestone dojis can be present even if there isn't a sell bar there. So, I mean, it's not black or red. It's not a selling candle. That's a gravestone doji. And then, taking a look at the Russell 2000 that's rejecting the 161% extension. You got the NASDAQ's on channel support, S&P's on channel support. We might actually have, some reasons for the equity markets to really start to pull back. And then also I should pull up really fast the Nikkei, which the Nikkei has also given us a false breakout. And if you see the daily chart here, we were talking about it last week. A break back below the 38% retracement is going to usher in some selling, and it has. So what happens if the Nikkei really starts to break some of these previous lows, like right here? Whoops, like right here. Well, it's going to get the attention of a lot of investors, especially like Warren Buffett, who's been long Nikkei and Japanese stocks for quite some time. All right. I guess the last thing I should probably mention is the Bitcoin. Bitcoin is really still, inside of its range. I think Bitcoin is still in a bigger, here, this is what the range looks like. You guys probably remember this. We're just heading up towards the upper end of its range. Trump reelected would be pro-crypto. Most analysts and investors believe. So that could be one of the tailwinds that's been driving Bitcoin higher. But obviously, as we get towards $70,000, we're going to have to pay really close attention to Bitcoin, as that is previous resistance from way back here in November of 2021. Now, at this point, I'm going to review last week's setups, and I'm going to give you this week's 3 trade setups. And before I do this, again, if you think that these videos are very beneficial in helping you prepare for the next week, make sure you give my team a big thumbs up, give myself a thumbs up. Comment down below if there's something that I might have missed, because there's maybe some earnings that you think are more important that I didn't mention, or maybe there's an economic event I might have missed. Jump down in the comments below, and thumbs up would always be good. All right, let's talk about those 3 review of last week's 3 setups. So the first one was selling the euro dollar on an approach to 110. Unfortunately, that didn't happen. We got as high as what, 109.30 or 109.43 maybe. Let me see. We got as high as 109.40. No, almost 109.50. So 109.48. So 109.48. That was the actual high. I was looking for a short above 109.50. So I didn't even take advantage of it. I was really being patient, trying to wait for a move above 109.50 towards 109.85, because 109.85 was triangle resistance and also a Fibonacci extension there. Sorry, I almost sneezed. So the euro dollar didn't quite make it to 110. So we were just, but it did. It would have been a great short if some of you got it, but it didn't quite make it there. So that one's scratched. Wasn't a winner, wasn't a loser, just didn't happen. It's a scratch. Same with the dollar Mexican peso. The dollar Mexican peso was setup number 2. We were looking for a move down to 1740. But I'm going to give you the buts. If you're part of the Forex analytics community on the 16th, which was it Tuesday? Tuesday is 16th. A new pattern in play went on for the dollar Mexican peso for reasons that I've explained in the live shows. So did we quite make it down to 1740? No. But if you're part of the Forex analytics community, you're probably long. And if you're long, you're doing pretty good. But for the purposes of this show, it didn't happen. So scratch the euro, scratch the US dollar Mexican peso. Okay, they didn't happen. Setup number 3. Setup number 3 was short dollar yen at 160 or a breakdown of 157.40. Well, that worked. It worked pretty aggressively too. A break below 157.40 gave us a move, basically a 200 pip drop. We actually closed at 157.40. So I'm going to count that as a win because I've been trading it on the short side quite aggressively as it broke down, and I'm sure many of you did as well. So on that breakdown, gave us 200 pips. 200 pips, not at its maximum. You're not going to get out at the very bottom, more than likely, and if you did, you're just lucky. But overall, that trade worked. So 2 scratches, 1 worked. All right, what are the 3 trade setups of this week? So I'm going to stick with the US dollar Japanese yen. I am looking for a short, and on any move above 158 towards 158.25. So let's draw that out. Basically, let me remove that. Let's remove this. Let's zoom in here. Now, if you didn't see why this was a key reversal here in the US dollar Japanese yen in Asian trade, go take a look at all the other yen pairs. You know, whether you're talking about the euro yen that had a big reversal, you know, below the 50 DMA, you had the Aussie yen that we reversed right at, you know, previous resistance, acted as current support. You know, pound yen, I think, reversed right on, you know, some horizontal support. It gave us a little bit of a false breakdown right there. So a lot of key reversals happen, you know, in about the middle of the week. But the US dollar Japanese yen, I think, is ready to be sold on the upside. So I am looking for a move back up towards 158 to 158 and a quarter to sell into that strength. So that will look something like this. Now we're currently at the 38% retracement, so any further move just above 158, I think, is going to offer some great opportunities to be on the short side of the US dollar Japanese yen, of US dollar Japanese yen this week. Okay. Next will be dollar Mexican peso. Buy daily close above 1810, which is basically right here. Okay. If you look at the dollar Mexican peso, 1810 is right there. You want to close above that. And if you're already long, we'll be adding to winning trades on a break and close above 1810. I will be, and you know, I'm already in it, but I'll be adding to that. So that was trade number 2. Trade number 3, short the S&P on a breakdown below the 50 DMA. So if you go back to the S&P, what I'm looking for, as I pointed out before, here's the 50 DMA. Here, 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 here. If we break below the 50 DMA, I am looking for an escalator move lower. Up on an elevator, or up on an elevator, or up on an escalator, down on an elevator. So we will be moving down the elevator shaft lower with the S&P on a break below the 50 DMA. So with that being said, I want to thank you all for being with me today, spending time with me. I know your time is your most valuable asset, and so given that you spend it with me, really makes me feel good. And I hope that this week ahead video will help prepare you for your trading week ahead. Have a great remainder of your weekend. Remember, on Monday, I'll see you on the F.A.C.E show. If you don't know how to get to our free shows, just go over to our website, forexanalytics.com, go to where it says webinars. We have a flow show that's in the European hours, and then the F.A.C.E show that's in the North American morning. They're both free to attend, so register here on the website, and I'll see you guys and gals there. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.